The stock market has long been a complex arena where traders battle to outsmart each other based on years of experience and instinct. However, a new player has emerged that is changing the game entirely: artificial intelligence. AI is revolutionizing the way investments are made, making the process faster, smarter, and potentially more profitable. But the question remains, is AI truly the future of investing? Over the past decade, AI-powered trading has seen remarkable growth. It started with major institutions like hedge funds and banks, but now even retail investors have begun utilizing AI bots to analyze markets and execute trades in an instant. These sophisticated algorithms can process massive amounts of data, identify trends, and make predictions with unparalleled speed, leaving traditional human traders in their wake. The proliferation of AI in trading might seem like a wave that cannot be resisted. Platforms like Trade Ideas, AlgoTrader, and Tickeron have leveraged AI's vast potential, transforming how trades are conceived and executed. While AI trading promises precision, scalability, and speed, it also raises questions about reliability and adaptability, particularly during volatile market conditions. So, how does AI function in the fast-paced environment of the stock market? At its core, AI utilizes machine learning and big data to evaluate vast amounts of information. It identifies patterns and predicts future market movements, aiming to capitalize on opportunities often missed by human senses. AI is oblivious to human emotions. It never tires, never panics, and never reacts impulsively. Yet, the power of AI is a double-edged sword. The pros of employing AI in trading are quite enticing. Its ability to execute trades at lightning speed, coupled with the elimination of emotional errors, provides traders with an edge. On the least favorable side, however, AI systems can falter, especially when interpreting unforeseen market crashes, a potentially costly mistake. Additionally, the high costs associated with implementing AI trading platforms can act as a significant barrier for novice traders. Lastly, while AI is efficient, it lacks the nuanced understanding and intuition that seasoned human investors bring to the table. The future of AI in investing is not about replacement, but enhancement. Experts suggest that AI will evolve into an essential tool rather than an exclusive solution. Human judgment and AI's analytical power can complement one another, leading to more informed and precise investment decisions. With AI, traders can automate routine processes, better assess risks, and optimize profit strategies. As the line between machine intelligence and human intuition blurs, one might ask, would you trust AI to manage your investments?